All right. Good morning. Happy Hump Day. Happy possible Trump tweet day. Who knows? Could get a cryptic message about Iran that moves the market 100 points. Been a kind of interesting week with some catalysts. I always warn people not to worry about what the news says or what the tweet says or what anything else says. Just know that it's a catalyst of what already was going to happen. If you watched any of my closing videos, we were looking for a bounce over the last 2 days, and obviously today we're getting that. We actually went long at the lows yesterday, so this open should be really good for us. We're going to take some profit right at the open, and then see if we can run up to a bigger target that we're looking for, and we'll get into those here in just a little bit. But overall, the market is really doing what we expected it to do, and what we have been expecting it to do for quite a while. Um, and we're kind of in a decision point as we come up here on this bounce, assuming that they go take out the prior high, and we'll look at that in just a minute. If you're new here, my name is Jacob Gabbard. This is Invest with Jacob. This is our live trading event that we do every Wednesday. We go through our indicators. This one we feature IWJ Pivot Point Pro. It is more of a day trading indicator and a swing long-term indicator. So we use the 5-minute chart, which we're on right now, for day trading, and we use the weekly chart for swing trading. You can see the buys on the screen right there. We also get sells. We haven't gotten any recently here, so it's been a bullish overnight session. And we don't trade the overnight, and that's really the biggest rule right now because we made a whole bunch of updates to the indicator, so you don't have to do a whole lot of thinking. You just take the buy and sell signals, and then we tell you how we take profit. We take 20% profit for our first half of the trade as soon as we hit the 20% threshold. And then from there, we scale out at key levels. So let's just say we hit 20% right here at 659.57 on this buy. We don't trade after hours, but I'm just giving you an example. And then the next key level would be the pre-market and after hours high that both hit right here around the 660 area. So we'd take another little bit off here, looking for them to either reject here and then we'd stop out and that's okay. Or if they're going to squeeze, get through here and squeeze and take us to the weekly high, where we likely take another little bit off. I also use Mentor Q levels. You can see them on the screen here, the call resistance, the high volume levels, the 1-day max, the put support, and all that kind of stuff. This is options levels, and these are what really kind of control the market because the market makers are the ones who really have the market moving in whatever direction we're going to go. And they are the ones who are selling you the option. So if you go buy options, somebody's got to sell you that option. Market makers are the ones selling that. And that's where these levels come from. This is the highest level of traded options for the day on the put side. So the 0 DTE put support. On the upper level, this is the intraday, I believe. Let me do the, yeah, that's the intraday. And the end of day level. So what happens is at the end of the day yesterday, they give you the options levels, which is your end of day level. And then overnight, obviously things happen and things change and the market can come out with new levels. So they still give you the end of day and they also give you where the intraday. So that means the overnight, this is the highest traded options level. So this will be a very key level. If it breaks through, we will enter some negative gamma. And all that really means is the market makers are going to be a little bit underwater below this. So they have to hedge. And so what they do is they sell futures, which adds to the selling pressure, which causes the squeeze to the downside or the waterfall effect that you see. Same thing goes with call gamma up here. So this is your call resistance. This is your highest traded level um, end of day yesterday and overnight. And then the 1-day max is where they expect basically the market to max out its high at. So 662.55 on the SPY today is the 1-day max, and that doesn't mean the market can't go over that price, but it is like a shoreline. That's how I always describe it. We know where the shorelines are, we know where the tides come up to, and we can build houses based on that because we know the water should not come up to those houses. However, in very strong storms, you have hurricanes, and that pushes the tide up past the walls and the sea and the shoreline and into the homes, and it becomes a breakthrough effect. So on very strong up moves or down moves, you can break through the 1-day max and 1-day min very, very strongly and continue on. And what the reason it becomes a storm is because this is like a critical loss level for the um, market makers. So they really have to double down on their hedging. So at this point, they are buying like crazy, which really adds fuel to the squeeze. They're still trying to defend. It becomes a really tricky situation. They want to defend these levels. They'd much rather have it close in here somewhere than anywhere above this or below this, or especially above this or below the 1-day min. So they will still try to defend these levels very strongly, and if they can, keep it underneath. So there are definitely times you'll see this like in the middle of the day, and by the end of the day we're back down here. So you can get above the 1-day max, but typically on, I would say 95, 97% of the days we're going to close below that level or at that level. And then same thing to the downside with the 1-day min. If you scroll down here, it's way down here at 664.76 roughly. Same thing goes here. They can get below it, but typically they're going to close above this level. Let's go over. We're going to look at some charts real quick to kind of give you a slightly bigger picture update of the market. We're going to drill in here and make this visible. Okay, so we got the big move down. Obviously, we've been in the midst of this big move down, but they hit the low down here at 64.80. They took out the November lows, and that is a change of character in the market. That's a big deal in the upper market sense. So in the big picture, we are still in a bull market because the last major low was the April low, and the last major high was right up here. So we still have a higher low from April and a higher high from January. Since that higher high, we have broken the November lows. So if we come over to the November section right here, the November low, they've broken decisively through that and then bounced up, and they're kind of back testing it and that kind of thing. This is a change of character in the upper portion of the bull market. So this is what we would call upper support, and they broke through that. Major support is the April lows. That is where the market really becomes a different beast, and also and starts to become a more bearish overture to the market, where we're looking at long-term selling. We're looking at long-term bear market that could last quite a while, much longer than most people realize. And so we're still in the early stages of any kind of selling event that would do that. Now we do have an AB, so A was off of the high back here, and then B is an expanded flat, and then you have C down as of right now with this diagonal of C coming into here. Off of a diagonal, you usually get a really sharp retrace. We got that. They brought it back down to the 618. This is where we entered yesterday, 65.85 off the 618. And so far, they've bounced it back up about 100 points off of that level, about 80 points off of that level. And we're actually looking for them to bounce it back up into the 67.89 to 68.61 area, the 618 retrace to 50 retrace, which comes in at some major support zones. So that we're looking for this to be an ABC up, and it does look like that. And in all cases, we're looking for this to be an ABC up. So if this low is a major wave 4, we'd be looking for wave 5 up to new highs around 7,100 to 7,300. However, we are in a large ending diagonal in the bullish structure, which means every wave is an ABC. So this wave 4 ends, wave 4, and then you have ABC up. So you're going to have an ABC up here into these areas, and that would be your A wave of 5, and then you'd have a B wave, and then you'd have a C wave back up toward that 71 to 7,300 area. If it's going to be bearish, then this was simply off the highs, just A down, and then this would be A, B, C for B up, this B right here, and then what we would look for is a pullback here in 5, or a drop here in 5 waves, a bounce, and a move down. So how do we distinguish which is which? Well, the big thing is they're going to look like an ABC up. So this part's not going to help us at all. This is going to look the same no matter what, in my opinion. And if that's the case, the drop from wherever we come up to here will tell us. If it's a 3-wave drop that's corrective, then we would look for the bulls to push again. If we're coming down in a 5-wave drop that is impulsive and more of it in line with what we'd look for in a C wave, that would be 1 of C. Then we'd look for a bounce and then the breakdown. So how they pull back off of a high that takes out this high right here at 67.50 roughly, that is going to be your indicator of what the next few weeks to months to possibly even years of the market has in store for us. We don't want to put the cart before the horse. I actually lean towards one more high. The reason is the structure would look better, and when you have an expanded flat like it looks like we do now, very often this precedes wave 5, so very often this is going to come in a wave 4, a B wave expanded flat. And if that's the case, then we would be looking for wave 5 up. So I do lean for one more high because the high on ES is very ugly. As we'll see on the NQ, it looks a lot different. Uh, you have a nominal new high here, and that's not really what we're looking for. Now, this does have a very Wyckoff look to it, which is why we're getting this distribution on the backside. But that can happen in a smaller time frame and still give you the wave 5 up. So that's where we're at right now on the ES. For the NASDAQ, we have the same type of thing, but as we look at the NASDAQ, we'll see that it has a much cleaner high and lower high. So here you have your all-time high, you have a low, you have a clear lower high, whereas the ES made actually a slightly higher high here. You have a clear lower high, and then you have a clear lower low. This is a much cleaner downtrend on the NASDAQ. So I do see a possibility, and I actually lean this way, that the NASDAQ's top is in, and even if ES goes back and makes a high, NASDAQ comes back up to this trend line, rejects, and turns down and makes a lower high. ES would push into new highs. NASDAQ is trailing and so far behind that ES would be much further ahead up here, would be up at its target, and NASDAQ would fail. That would be my primary expectation to the upside. But the same concept still exists. This can be wave 3, this can be wave 4. If that's the case, we're looking for A, B, C for A, a B, and then a C wave higher towards 27,000. And if it's going to be bearish, we're still looking for an ABC here for B, and then we look for a 5-wave move down, a bounce, and then continuation on the NASDAQ. The target to the upside is 25,180 to 25,511, which comes in at this huge resistance here and this huge resistance here. The fibs line up really nicely with that. So just right now we're expecting a bounce, a little bit of a bull rally, especially after all this selling. You get a lot of very strong bull rallies in bear markets or bear moves. Bear market rallies are very strong usually. And then we'll see what happens at the next rejection point. Again, 3 waves down, bullish, 5 waves down, bearish. Good morning, Jacob. Your website seems to be down. Uh-oh. Let me go look here real quick. Thank you for the heads up. Let me see. Huh. Well, that's not good, is it? Give me 1 minute here, guys. Let me check that out and see what I can come up with. Let's see. I have... Bear with me here while I check that out. Feel free to type in questions so that we can get those answered. I'll take care of that as I check out what's going on with my web page. All right, let's see here. Hopefully everybody's having a good day. Hopefully this day's, a little better for trading. Wednesdays have been rough for us. We've been okay, that side's good. We've been having bad Wednesdays. The indicator itself is doing incredibly well. We are profitable this year again already, doing well. Last year we had an incredible year, but Wednesdays have been hard. Sorry guys, I'm just trying to do a couple things at once here. I have an ADHD mind, so it gets distracted pretty easily. see if cheese pizza. All the two-factor login stuff is so annoying. I realize it helps, but doesn't make it less annoying. Huh. I don't see any issues there. Interesting. Well, your host database server is down. That's not what they're saying. Well, we are about 10 minutes from the open here. I'm sorry, guys. My apologies. I appreciate the heads up there, Sonny. Um, Let me see what I can figure out. This is super annoying. Where is your support at? Guys, if you ever make a web page, make your support easily findable. It drives me nuts that you can't just get a link that says support. All right, let me see. This works. Running a little test on it here to see if we can get it to work out here. We're not using too much. Okay. Okay, I think we may have fixed it. Let's see here. All right. Should be good now, Sonny. Hello, George. Welcome to the stream. Sorry about that, guys. That was really annoying. I don't want people to be locked out of what they need to get into, so I do apologize for that little delay there, but I think we're good now. I think we've got it figured out, and we are back up and running. Sonny, would you mind verifying if you can reload the website and make sure it's up for you? I can see it on my side, but sometimes that doesn't always matter. All right. So anyway, that's where we're at on the ES and the NQ. We're looking for a continuation of this bounce. Um, I will say that right now it doesn't look that impulsive to the upside, which is a little concerning for the bulls because you have your A and B, so this should be a C. C's should be impulsive, so unless they're going to make it a diagonal, which in this market is extremely common these days, Unless they're going to do that, we are um, potentially in store for another low down around the 764 down here, which would be, if we go over to here, the 764 is 65.46 on the ES, and going to be, I don't have it on here, so let's just see what it is real quick here, and then we'll get ready for trading. 24,000 on the NQ would be the next level down if that's what they're going to do. I think today we're going to put Squeeze Sniper on the screen. Let me go to my indicators, my scripts. Squeeze Sniper. No, that's not the one I want. Delete that. Indicators, IWJ, Pivot Point Pro, Pivot Point Pro. Maybe that is the one I want. Let me see if this is the right one. Nope, this is the wrong one. Well, let me see. All kinds of issues today, huh? This one? Nope, that's an old version. Having all kinds of stuff go awry today. Anyway, Flo, welcome to the stream. Wish you all a green day. You too. Hopefully, it is a good trading day. Got about 4 minutes to the open. We're not really in a position to have a trade right now. I don't believe. Let me go check. No, not yet. We're not in a position to have a trade right now. So, not too worried about the open giving us a trade. Give me 1 second here. There we go. Okay. Okay, so we are on the 5 minute SPY chart, and this is your data box over here. I'm going to take this off the screen here in a second, but this is a really cool feature. It goes back, so however many trades it can go back and look at on the chart, it does, and it tells you that, hey, we've looked at 200 trades. You have a 61% win rate. Your average win is 128. Your average loss is 58. Your net points over those 200 trades is 110 positive. Here's your last 15 trades. So there was a 74-cent winner, 65-cent loser. So you can see that all your stats here, you can see that you go through losing streaks just like anything else. You had 1, 2, 3, 4, 5, 6 out of your last 15 were losers. So you were 9 and 6, which is about 60%, which makes sense. That's about on average. And your average win loss is going to be a little over 2.5 to 1. So it's a really, um, really strong indicator. It gives you all the stats on any chart, any time frame. So if I switch to the 15-minute time frame, it's going to instantly give me the stats for that. 246 trades, 66, 68, almost 67% win rate. Excuse me, 67.5% win rate. Average average win of 276, average loss of 0.93 with a 383 net profit. You can see it's absolutely killed on the 15. The 15 is what I use generally. And you can see exactly what happened in the trade. So if it says TP2, it means it got all the way to the take profit 2. Your stop obviously means you stopped out. Your 124 means you took profit. You hit your first take profit level, and then you broke even on the second. So that's your total. And this is, so if we go look at that trade, well, it's a few trades back. Let's see if we can find it real quick. Um, So the yellow is your short entry, by the way. Your green is your long entry. So here's your green. So you can see here. Here's one. So there's two of them in there. So let me squeeze this over so we can try to see them both. So on the entry, yeah, here you go. So the first half of this trade, you took a 249 win, and it's telling you you realized $1.24. So this entry over here, here it is, $1.24. So so you took a 249 win and you got stopped out at break even, which means you got half of that, which is about $1.24 and a half. So it gave you $1.24, and that is your overall move. So take profit one and break even gave you $1.24. So it's giving you the summary of, or the, not the summary, that's not the right word, the actual realized points of the trade. It's not giving you what you want up here and then break even. It's dividing it by two because half of the trade was at 249 and half was break even, so you divide that by two. Anyway, we'll take that off the screen so you don't have to see it. You can switch it to anything. So if we go to the ES, it'll instantly give you the ES stats for the trade, and you can just see it's crushing. 2,400 net points on the 15-minute ES over 250 trades. That's about almost 10 points a trade average. That's pretty good, and 950 to be exact. So that's pretty amazing stuff right there on Squeeze Sniper. So if you want to check it out, there's a link. It's discounted heavily right now because I just released it. So if you want to check it out, do that. I'm gonna take this chart off the screen so we don't have to look at it. And we'll go back to the SPY. We'll go back to the 5 minutes. And where's the SPY? There it is. Okay, there we go. Let's get back over here where we belong. So I don't coach the Squeeze Sniper trades because they literally tell you everything you need. In other words, when we do these trades, I tell you when to get in, when to get out, but Squeeze Sniper does all of that for you. If I take off my stupid volume there. So this entry right here is a long. It tells you your entry price was 659. It tells you your exit is, or your stop price is 658.50, and it tells you the score is 6 out of 10. It's a grade B trade. They go from C up to A plus. It tells you exactly when to take profit and at what price and what you did, and then it tells you where your stop is and stops you out. So uh, that is that. Let's get over to where we need to be. All right, big shot up here at the open, back toward the um, original levels. Sorry, the overnight high is what I'm trying to say. Still a little trying to catch up from the website incident there. I'm trying to get that back online. Um, One second here, guys. Sorry. Prabs, good luck to JG. Good luck all today. Sniper working really well for me. So happy with it so far. That's great to hear, Prabs. Thank you very much for the feedback. Glad you have it. Um, I need to post a win here real quick. So let me do that. One second, guys. We had a swing trade from yesterday, so we need to get some off the table here. Our 655 swing. Okay, we are going to close 1/3 of that for 1450. Okay, just getting everything caught up from that. Let's go to our day trades. All right, I think we're almost where we need to be. Sonny, thanks for confirming. This week is not complete without a day with JG. That's great to hear, George. I'm glad you like it so much. Hopefully this Wednesday will be different. I agree. Interwave flow. It's got to be can't be worse. I mean, it's not like we've been getting decimated, but it's just been not great trading. Um, so we're in a buy signal right now. It started here in the pre-market. It's holding up well. And we didn't take the buy. Obviously, we don't trade the pre-market or post-market. I'm just saying we're in a buy signal, which is why you won't get a buy here at the open because the indicator says, "Hey, I'm in a buy. Why would I reissue it? I've already told you to buy the market, right?" So it's not just going to keep saying buy it, buy it, buy it. It's going to tell you where you should have bought it, and then it'll have to go through a cycle, and hopefully we get that and get a little bit of more buying so that we can get a sell signal. As of right now, we have the ES is outperforming. So NQ, if we go over the NQ, it's way so ES is way up here at the highs. NQ is just getting back to this little high off of this. So it made a high, a low. It's trying to make a higher high. It keeps rejecting here. So the NQ is lagging and sold off a little stronger than the ES here. So you got this buy signal and you got stopped out on the um, Nasdaq. So it is underperforming right now. Even though it is actually leading in percentage, it is underperforming at the open here, is all I'm saying. But there it goes. It's catching up now. That's for sure. Okay. All right. ES approaching the highs here, looking for a breakout. One thing you'll note if you don't have Pivot Point Pro or you've been thinking about getting it, or if you do have it, we made a lot of updates. So trend days, we don't have to worry about how those work. Pivot Point Pro handles those and gives you the trades even on trend days. So, um, okay, so Sniper just fired a long here on the 5 minute chart, and it gives you everything right here. So here's your entry, your stop, your score, your grade. It's a grade A trade. Looking for them to push here. Um, and so you just let it happen now. You just go with it and wait for the take profit bubble or you hit your stop. So as it goes up, you should get a take profit bubble at some point. And once you get that, you are all set. So we're seeing a squeeze to the upside playing out. If you heard that weird alarm in the background, that was the alert I get for squeezes. Might see a little rejection here. They're trying to get through the pre-market high, so seeing a little bit of rejection here, back test is not going to be uncommon. We'll see how they play it out, but the Nasdaq squeezing back up to its highs here, and a trend day up looks like it's going to try to start playing out. We have really good ADD. It's 1800 right now, positive 1800, which is bullish. We have the 422s, whatever. Your Volt is positive 4 million, 42 million currently. So so far bullish on the what's the word I'm looking for? Bullish on the internals and bullish on the chart. And you have green all the way down, up and down. The transports, the banks, everybody's supporting this rally. And it's really what we were looking for. Yesterday I said we were coming into a lot of support zones on a lot of charts, and that would be a very, very likely spot to rally. The 618 on both the ES and the NQ, as well as other supports on the Mag 7. SMH was coming into support. So a lot of places to look for the market to hold support, and then go from there. Brad, welcome to the stream. He says the 1 hour squeeze fired long as well. That's a good sign for bulls. Oh, on the NQ, you're saying. Let's see. Oh, yeah, NQ's got a long. That's a good one. That's an A plus trade. So don't get caught up in the grade of the trade. A plus should, in most cases, outperform and give you more often than not both profit targets. But there's also losing A plus trades. Just because it's an A plus trade, I don't want you guys to overplay your hand on those and say A plus. I got to get all my money in. Um, you're never a lock to win any trade. This just has a higher probability of hitting both profit targets than say a C does. Um, there's a lot more room for it to run. There is a lot better setup. The internals of what create the squeeze and create the trade are better. Overall, it is the best setup we can have, but all setups fail at some point. Otherwise, what will we be? Say it together, billionaires. Only the billionaires know when Trump's going to tweet that the oil's up or down or whatever, that the strait's going to be open or closed, or that the war is going to stop or start, or whatever catalyst they know he's going to put into the market. Only the billionaires know that. Let's go back to our normal. So if you're looking, these red arrows here are pressure arrows. In other words, they say here pressure is down. When they go away, that means pressure is starting to build to the upside. Um, and that doesn't mean pressure is going to be up until you start to see green arrows. Now you're seeing green arrows here, which indicate pressure is up on the charts, um, meaning buying pressure is coming in much stronger than selling pressure, and that the squeeze setup is generally for an upside squeeze, not a downside squeeze. These are just telling you, hey, pressure is building to the downside, and if they break through, expect an alert. And then vice versa. If you see the green arrows, pressure is building to the upside. If they break through the whatever in the internal formula is, if they break through, expect a squeeze to the upside. So all those do is tell you where the pressure is in the market, and that pressure is building in that direction. And if they're able to break through, and that's the thing, right? So what happens at support? Pressure builds on support, builds on support, builds on support, and one of two things happens. You get a breakthrough and a waterfall. So that's what they're telling you here. They're trying to break through, or support holds and you get a squeeze. And then support held here, pushed, and now you're starting to get the squeeze alerts for the upside. Again, the green arrows telling you pressure is building, and where are they at? They're at resistance here, right? So they got to get through the resistance. Pressure is building on the resistance. They get through that, and we should see some higher levels. Now, the only issue here, and it's not an issue because it's 200, 180, 90 points higher, is that you do have the 1 day max up here at 24 and at 591. So you could be capped a little bit in how far they can push. But remember, intraday, they can push above that and then come back down. So we'll see how it plays out. Let's go back to the SPY. Morning, Jacob. For the IWJ Squeeze Sniper, do you need access to the U.S. futures market if you're looking at SPX or NASDAQ? If you're looking at the NQ1, if you're looking at futures, yes, you need access to the futures market. If you are not looking at futures, if you just want to trade on the SPY or the Qs or um, IWM or any other stock, then no, you don't need access to the futures market. I recommend it anyway. It's just a better overall. What's the word I'm looking for? It's a better overall tool, in my opinion, on the futures markets. That's what it's built for. But if you're not trading futures, then I don't think you need the futures data. Also, are there alerts, either sound or text? Yeah, if you didn't hear it earlier, there was alerts that came through on my phone, but you just go over here and you hit the three dots and you hit add alert and you select. So the condition is 15. You're doing the squeeze sniper. What do you want? Do you want to know longs, shorts? You can make a alert for both. So you make alert for one, then come back and make alert for the other. You put your time frame on there. So the time frame here is saying same as the chart, 5 minutes, but you can pick any time frame you want. And then when you come in here, you go down to notifications. You want to check notify an app and make sure your push notifications on your phone are on. And then I select them all. This gives you an on-site. So um, when I'm on TradingView, it gives me an alert little window up there that tells me. It also sends me an email. I also get a webhook URL that posts a request to a specific URL, and it plays a sound, and you can pick whatever sound you want and for how long it plays. So you can do all that, and I get an alert on my phone for it. Stopped out on the ES, yeah. Yeah, they've turned it down here off of this resistance, the all-time highs. Coming back to the open will be an important area. Um, they don't like to go red too far if they're going to continue in a bull case here. Given that they have now closed below all three moving averages, I would expect them to potentially come back down to the pre-market low, which is 656.47. But we'll see if they can hold this support. They're pretty critical support right here for the overall day, um, or at least start 5-minute chart day, I should say. This wall of support. So as long as that can hold, we'll see. As long as that can hold, they can still push higher. But this will be interesting part or time um, for the market for today. Overall, in my opinion, the 15-minute is where you want to be for squeeze sniper. If we go back real quick and look at the stats, you can see that the 5-minute is a 61% win rate, and if we go to the 15, it jumps up to 67.5%. So it's much, much stronger on the 15. You can see on the SPY, the last three all hit take profit two. 4 out of the last 5 did. This one stopped out, obviously. This one was a winner. This was take profit two. Then you had some losers down here. But you hit a lot of TP2s on the 15, and that's what you're looking for. So the 15, in my opinion, is where the bread is buttered, if you will, or money is made, whatever silly, stupid saying you want to use. The SPY AHL is much lower. Is the PML or AHL more relevant here? Both are relevant. This is relevant to the short term, and if they get through that, then the AHL comes into play as a potential target. They should be coming into this zone now. They have clearly failed this breakout. So it's a failed. So here's what you have. You have a breakout setup, and you're going to get one of two things. You're either going to get the squeeze, or you're going to get a failed breakout, right? And failed breakout doesn't just pull back; it pulls back all the way to the pre-market low at a minimum. Unfortunately, because the Nasdaq underperformed here, we did not get a sell up here on the overall chart because the Nasdaq was never good enough to get there. Uh, so the ES is in a sell right here. The ES sell fired and the SPY sell fired, but the NQ was not on board with that. It was already in a deep sell cycle. So there's not a whole lot. If we go right here to hold it up after that. You can see this peak here, this peak here. These were yesterday's highs basically. Held it up and overnight. So they hit it here and hit it here. If they get below this, we could definitely see yesterday's close, the after hours low, and potentially a gap close here. They don't have to. I mean, there is some support right here that's okay. But in general, this is going to be the major support they're going to try to hold. So I would look for a strong reaction off of this level. If they don't give a strong reaction, there's still the possibility they can run a trap, sweep the low and then go. But if they break this cleanly, then they could free fall a little bit here for sure. Did you get a sell on the ES at the 945 bar? Probably. I don't know. No. Wait. 940. What time is it? 9:52. Oh, 950. No, I did not get a sell on the ES because the SPY is not in line. Sorry, the NQ wasn't in line. Excuse me, the NQ. So I'm interested to see off of this. Yeah, it puts us right there around that 764. You could see a C wave down here, which would be pretty strong selling into this 647 area for a lower B wave. So remember this move up here is A, and then B, and then C. Um, so we'll see if that's going to play out. That certainly is a possibility, especially given off of this low, you really don't have a great structure. Yeah, this is not really a great structure. So the Bulls do have a little bit of work to do to turn this into a diagonal, which is why it's going to be choppy. Um, so we'll see what they do at the pre-market low here. They're just about there. A C wave diagonal wouldn't be shocking, just because the selling pressure has been so strong that uh, a consistent rally will be very hard for the Bulls to get. However, there will be flashes of 100, 200 point moves like we saw off the couple of tweets. There will be flashes like that, and that's how kind of diagonals work, where you get a bunch of C waves in there. So you have an A and B of one, and then C of one for a big rally, and then you have two, then you have A of three, B of three, and this is usually a really nice rally, and C of three, and then you have four, and then you have A and B, and then C of five is usually pretty good as well. So you'll probably get a choppy move higher. I don't think they want to come all the way down for the 764. It's certainly possible. It's certainly a very viable option. I think if they come down that far, they're just going to sweep and take a new low there. So we'll see again. We have to see how it plays out fully, but as of right now, it does not look like a direct impulsive C wave where you're just going to get straight rally, which is what you typically would get there. So we'll see if they can build the diagonal out and do it that way. All right, come into the pre-market low now. We'll see if they're able to find a bounce. Given that they came down so close and bounced away back to the 8, um, that typically means they want to break the pre-market low. So be interesting to see if they can hold here or if this is going to maybe trap a little bit below down here to maybe 655 and then try to reverse from there. But it's a not a great setup for the Bulls right now. If they can hold this low and rebuild this bar before it ends in 1 second, then maybe. But that's not a great bar for the Bulls. All right, there's a spike down. Let's get the volume back on here so I can see it. We'll see if so. This is their chance to trap, right? Uh, the Bulls can run the trap here, and then the Bears are going to want to do this. So now comes the moment of truth, if you will. Refresh your cache. I smell bull trap going into the weekend. Thoughts? It's possible. I still think the Bulls rally. So much for squeeze pressure to the upside. I, I'm not sure what you mean by that, but okay, I guess. 655.4 is the Y value area high. Makes sense to bounce there. I don't know what you mean by Y value area high, but um, okay. I'm sure that's something. I'm not saying it's not a thing. I just don't. It's not something I use, so I don't know what it is. Oh, yesterday's value area high. I gotcha. Y is yesterday. Decent volume coming in on this bounce. Looks like it could be a trap here. Um, we'll see. The next bar is really going to kind of be the make or break because they're going to come into the 8 on the 5 here, and If they reject this and take out this low, then it's game over to the downside. If they, they'll probably reject anyway and hold and go, or if they just squeeze. Either way, um, then the bulls are going to take this back up to the highs and probably start to push out over the highs. When you get a break of both sides, that's kind of extreme pressure. So we got a break of the pre-market high and a break of the pre-market low. Now we didn't break the after hours low, which is interesting. Not interesting. It's because of the big move in the after hours, but which is important, I should say, because you did break the pre-market low, which typically would lead you into a trend type day down, and we could still see that. But we didn't break the after hours low because it's so low from where we launched off of yesterday. Off of that low, the Nasdaq is looking a little stronger here than the ES. So the ES is probably going to catch up. We do have a buy warning flashing, so we need to pay attention to that. Options prices are elevated today, but not like out of control elevated. So that typically means the bulls are going to be able to hold the bounce at least. Um, I'm sitting on a 658 potential buy here. They basically have gotten to the 8. So far, they've rejected it, which is normal. We would expect a little rejection. Now, how are they going to reject it is the thing. Are they going to rip it back to the downside and take out this low and push down? Or are they going to be able to either chop, sideways and make it a horrible day or push on out of here? But sorry, we'll get a up or down decision. I don't think it's going to be a ton of chop. I think it's going to be either a breakdown strongly or the bull squeeze. We're kind of at a decision point here of is support going to hold or not. Did you get an NQ short trigger on Sniper? I don't think so. I didn't get an alert. Uh, no, it doesn't look like it. As I said, NQ's been stronger since the bounce, which tells me we could see higher. They just closed above the 8 on the 5. So we'll see if they can hold that. The DXY is breaking up. Yeah, I just don't do currency. It's too messy. Currency is so messy. Everything is a diagonal in currency. It's like it is now. I can barely stand doing the ES and SPY and NQ anymore. They've been in so much of a choppy environment. But RTY leading strongly today, so it's unlikely to see a meltdown here, in my opinion. NQ still holding on well off of support. I would favor the bulls here in this case. Doesn't mean you can't spike a little lower, maybe down to 655 on the SPY. That's a key level, but I would favor the bulls overall to try to push this back higher, unless the RTY is just going to melt down. You are getting an ADD that's trending down. It's down to 880 off of 1800, so it's down about 1,000, showing some weakness. But the Mag 7 is pretty strong today, and when you have a strong Mag 7 and a strong RTY, it's very hard for the market to fall. Let me see if I can help you, Andy. I don't talk very loud when I'm doing these, so that could be part of it. But let me see if I've got some mic volume I can turn up for you. Maybe that's a little better. The difference between the two indicators is pretty simple. Squeeze Sniper is looking for squeeze setups that are very likely to play out, and it gives you all of the tools you need to take the trade. It gives you the entry, the take profits, the stop, all of it. Where the Pivot Point Pro is looking for reversals. So one is looking for runners and continuation, the other is looking for reversals. Um, they're both very powerful tools. They both work very well. They are both, in my opinion, very high quality tools, but um, they're very different in nature. Well, that's as high as that volume goes. Maybe I can. I don't know if this helps at all. Did that help? I turned it up a little better on my. So I turned up the software volume as well as the mic volume. So hopefully that helped get it to a point that it's better. Okay, good. So that did help. It's so weird because GoToMeeting, which I use for my daily calls in my room, I hardly have to have any volume on anything and it's fine. But in these live calls, the volume has to be cranked up. Gooseberry, Hope, Jabronius, no, Jabronisrus, Jabronisrus, Jabronisrus. There you go. Welcome to the stream, John. Welcome to the stream. Interesting. Thanks, John, for the update on that. All right, there's our buy. We're going to get in at 198. And our stop is going to be 657.50. See if we can break the Wednesday curse. Tough entry. We're right at the 21 and VWAP here, so I would expect some rejection. It's because the ES lagged. The NQ has been ready to go for a while, and then the ES is not just now getting on board. So we'll see if we can break the curse here and hold the 8 and push, but it's not a great entry spot when you come in at the 21. All right, if they can press here, that's at least somewhat of a good sign to hold the 8, but they got to press and turn it green for us, and then we have a chance to maybe do something here. I'd be okay with a doji candle here. That would be perfectly acceptable behavior for a continuation of a bullish move to come up to the 21 and um, give a little bit of weakness, but not a lot, and then kind of doji, and then move through it on the next one. They kind of got up to VWAP, so they haven't fully tested VWAP yet, but they're close. So we'll see if they can. Holding the 8 at the bottom will be good, obviously. If they can continue to do that, that will start to build bullish momentum to the upside and bring the 8 closer to crossing. And that'll allow them to push through VWAP and this resistance right here above it. This is going to be one of those, if you've ever watched like a dog poop and it's stuck, and then all of a sudden all the poop comes out at once. I have dogs, so I've seen that a lot. That's kind of what you're going to see here. It's going to come up here and sit, and then it's just going to go. So hopefully we get something like that, and we're able to capitalize on it. Or Augustus Gloop in the chocolate pipe. Yes, yes, old school Wonka reference. $198, Otis. You can get better than that price right now, actually. But I got 198. Let's not lose the close here. They're going to lose the close. You did so good. All you had to do was doji this candle. Yep, there it was. 169 a stop out. May get another try here though. We'll see. That was annoying. The curse of the Wednesdays continues. And um now the NQ is too many bars away from its buy signal, so we can't get another buy signal, unfortunately. So, uh, even if they do break out here, that is not going to be given to us because NQ, if we go over there real quick, had a much stronger reaction here. NQ looks very strong here, like it wants to break out, and it looks like it's going to. But ES was a laggard. So you can see off the low, when they spiked the low, NQ had 3 very strong green bars. If we go back to the SPY, you can see off of the low that they had 1 strong green bar, a weak green bar, and then another strong green bar. And that finally got us up to where we could get a buy signal. And it was too late because the NQ was second strong bar had already gotten there. So if they do push out here, we do have our swing long that's crushing right now and doing really well that we took yesterday at the lows. And we'll continue to make money on that. But the buy signal is not going to come here. And would they stop us out by 3 cents? 6 cents. That's super annoying. And that's assuming they take it higher, which it's looking like they want to, but they still got to get through VWAP and this resistance here. I'm going to give them a few more bars to see if they get back toward the pre-market high because that could initiate a sell. But if they don't and they push down here, then we'll likely call it for the day. You generally only get, with the new updates to Pivot Point Pro, you're only getting 1 to 2 trades most days. And the reason for that is we're filtering out a ton of losers. In most days, we may have traded before like 4 trades, but only 2 of them were winners, or we may have got 3 and 3 were winners. Sometimes that did happen. But we found that if we made some updates, which we did obviously, that we could filter out the trend day stuff. Remember on trend days where you'd get like 10 entries against the trend and they were all losers? Well, all of that has gone away, so you don't have to worry about those. Now, does that mean we will occasionally miss moves? Yeah, it does. But it also means that the losses incurred after doing all the math and data research, the losses incurred were so great that those moves that you would have caught wouldn't even have made up for the losses that you incurred trying to catch the move. So we were okay missing some of the moves, and to give up all of those losses that you would have had before. So we've really highlighted the 1 to 3 best entries of the day with the changes we've made, and it's turned out to be a huge cost saving. So you trade less, make more. That should be a motto you have in trading. People who want to trade the 1 minute and the 5 minute and the 10 minute and the 15 minute and the 20 minute and the 30-minute chart. Oh, there's a tweet or something. Because that hit 660.50 in a heartbeat. No, that's a weird wick because I don't have it on Thinkorswim. Interesting. Something's happening though. Some kind of nefarious event is going on. There had to be a good news tweet. Jose, if you're not in my rooms, I don't have the marketing material out for it yet. That's why I just offer it here, because I can display it. Oh, sorry, Jose, I didn't see your first question. Sorry, I'm a little late. Maybe you already answered this, but the squeeze indicator can be used on SPY with options, or is it only built and tested with ES? No, so you can use it on anything. So it's got if you come into the settings, you can go to the trade log. So what we've done is I wanted people to see, I don't want you to hear me tell you, because I could tell you anything. You don't get to see it on the chart. You don't get to do anything. So we built a trade log that goes back on any symbol on any time frame and gives you the stats exactly as they are on the screen. And so you just click on that. And so we're on the 5-minute SPY, and over the last 200 trades, and that's as far back as it goes. A TradingView only gives you so much data. So 200 trades worth of data is what we have right now. It's got a 61% winning percentage. Your average win is 128. Your average loss is 0.58. Your net points is 110. Here's your last 15 trades. And this is for the 5-minute chart. I prefer to use the 15. So if we go to the 15-minute chart, you're 67.5% winner, 383 points. Your expected 1.5 points of SPY movement. So in options, 1.5 points of SPY movement is a lot. And your average win is 276. Your average loss is about a point. So you're getting more than 2 to 1 on your win-loss ratio. And you can see we're hitting take profit 2 quite often on this. So I prefer the 15. I think it's much more accurate. It's not to say the 5 isn't accurate. You're making money on the 5-minute chart. You're making money on the 15. You're making money on the hourly. If you go to the hourly, over your last 240 trades, you're 65.5%. Your average win is 173. You got 414 points. Now, what I would say is, on the daily, because of the way the dailies work, it's just not that great. It's okay. You make money. But you can see your win percent drops all the way down to 42%, 41.5%, and you've only netted about 37 points over 77 trades. So you're just not getting enough trades, and the ones you're getting aren't great. So I would stay away from daily or bigger. The 4 hour is not bad. If we go to the 4 hour, it's not great, but it's not bad. It's 65%, 366 points. But for whatever reason, it just can't figure out the daily. You can see the last 4 hour trade was here. You got in short on the SPY at 655, and somewhere down here is going to be. Oh, did that end up stopping out? Oh, I see. Yeah, it went green right here and stopped you out. I really thought there'd be a take profit down here, honestly. 644. So you were 9 points down in 8 hours. That's a pretty. I would have probably taken some profit there. I don't know. You don't have to. Obviously, you should follow the rules of the indicator. But, you're still hitting at a 65% on the 4 hour chart. And guys, 65% means you're going to have really good winning streaks, really good losing streaks, and then just some normal 65% type of runs where you hit 6, 7 out of 10. You can see we lost on the 4 hour. The last 4 trades were losers, and 4, 5, 6, 7, 8 of the last 15 were losers. Overall, though, you're a 65% winner. So you have to understand that trading is a long game. It doesn't mean you're going to win 6 out of every 10 trades each time. It means that you're going to win 65% of the trades over time. But the smaller time frames are much better, in my opinion. The 1 hour and below, a lot more consistent. and do really well with day trading and short term, like 1 hour swing trading is really strong, 65.5%, 400 points. So you can use it on anything. This is the SPY. You can use it on, if you go over to Meta, just to pick one, you have a 68% win rate, 800 points, average win of 7 points on Meta. That's pretty solid. If you go to, say, just we'll pick random ones, Apple. Apple is a 71% win rate. 300. This is the hourly chart, by the way. And then you can just pick any time frame. So yeah, it works with everything, and it gives you all the stats instantly. You don't have to go back and run research and do all the stuff. You can go check them all, but it gives it all to you instantly. If you want to do it on gold, 60% win rate, 167 total points. If you want to do it on Bitcoin, this is a 5-minute chart. So let's go to now Bitcoin, for whatever reason, if you go to the daily chart, it loves Bitcoin. 66% win rate. Your average win is 3,500 points. Your average loss is 840, and you've netted 85,000 points on the daily. I mean, this was a 10,000 point trade right here. That was pretty good. 9,000 point trade, 7,000, 13,000, 11,000. I mean, it loves Bitcoin. But still good on the smaller charts. 66% win rate, tons of points. You're just killing it. So, yeah, any chart you want to go to, it'll work. And if it doesn't, don't use it on that chart. If you go to one, I mean, I've never tried it on, like, say, JP Morgan. 73%, that's pretty good. Starbucks, 72%, that's pretty good. So, there's if doesn't have a great win rate, just use a different alert, or different chart, I should say, and you can do that. So let's see here. That's the 15. Look at these shenanigans. What was that 5-minute candle? Where's that at? Yeah, shenanigans. What is this? Expect price to be up here at some point. Again, they don't do that by accident. Logs all trades 24/7, aftermarket and pre-market. Yes, that is true. Now, here's the thing. You can turn off pre-market in your settings, but it needs that data to configure what it's doing. So if you turn that off, it doesn't get that data, and I've honestly never tried it with it turned off, but we use that data. So if I just go to regular trading hours, and maybe it's better. Who knows? I don't know. We need that data in there. Yeah, 59%. It drops off quite a bit. Let's go to the 15. 62. Yeah, it drops off about 4% if you turn the after hours data off. But because it needs that data to configure properly. So it does give you after hours and regular hours trades. But I think in the alerts, you might be able to just say, give me long entry, same as chart, add condition, price. No, crossing, no, value, no. Okay, I didn't know. I don't. You might be able to put a condition in there or do something to say only give me regular trading hours alerts. One thing is obviously change your session. However, that is going to skew your data because it's truly built for futures. It really is. If I'm being honest, and futures trade 23/7, basically 23/6. So it's beneficial to have the after hours data. Can you go over guidelines, what to expect next on Pivot Point Pro? Like right now, what's required to get a sell or get the next buy? I mean, it hasn't changed. They got to go through a buy cycle and then complete that, and then you'll get a sell. And they go through a sell cycle and complete that and get a buy. But if it's a very strong moving day, you don't always get the sells because it's a trend day. It's got to fit different criteria. That's why we put in the buy and sell warnings. It is what it is. There is no here's when it's going to happen. You just have to either put an alert in or be on the chart or whatever. But there's no criteria I can give you. Like I said, it's 160 or 170 things that are all being measured at once, and when they meet the criteria and the cycle is over, then we get the opposite trade. But you can always say we got a long stop here, so the potential could be for another buy unless NQ doesn't have one. Do you have dark pool trading data input into your indicator? Not specifically dark pool, no, but there are ways to pull data that we monitor. Um, so it's not specifically dark pool, but it's able to figure out where the dark pool is, or where the major transactions are. Can you make a robot that trades automatically 24/7? The answer to that is probably. The execution of that is no. And the biggest reason is liability. There is so much liability if it malfunctions, if you're talking about people's money that you are now controlling with a program, and I am not going to be in charge of that. You are in charge of your own money. So while the answer to that is yes, and there are programs out there that will do it, if you just Google trading bot, you can build one on your own, or have somebody build one for you. But I am not ever going to do that. I do not want to physically be in charge of other people's money based on a program that I have written. That is never going to happen. I am happy to help people trade. I am happy to give you entries and tell you my thoughts and do any of that stuff, and also give you the caveat that if you need financial advice, you should seek financial advisor, blah, blah, blah. Everything I put on here is my opinions and thoughts. You need to trade your own money your own way, all of those things. But no, in theory, in practice, yes, that can be done. Will it ever for me? No. Oh, we're on the 15. I thought something was a little off here. How's the book coming on smart money manipulation? It's coming along. I'm in the second half of it, which is price action. So the first half of it about how the market has manipulated you since birth is done. I'm working on the second half, which is the price action portion of it. That takes a lot longer because price action's a lot more educational, and it takes a lot more to talk about and do than explain manipulation. So it's getting there. It's the second half is taking a lot longer than the first half, but we should have it out in the first half of this year. Meaning a robot linked to a sniper that you use yourself. No, I understand the theory, but if I build the robot, then I am liable for how that robot works. And if that robot decides it's going to malfunction and hit the buy button 65 times and your entire account gets put on a trade and the trade goes wrong and you lose all your money because the robot malfunctioned, that's on me. And or even if legally you can't prove it, I don't want to be that person that has a chance to be in a spot where I would screw somebody over like that, or put them in a position like that. Heck no, techno, I'm out on that. I have no interest in anything where something I built would control other people's money. No, thank you. Could I do it for myself? Sure. Then it's on me, strictly for me. But um, things malfunction, codes go wrong. You test something, you don't realize there's a bug, and the bug is an absolute nightmare. Those are, you know, those are really bad things. It's already bad when I have bugs in these indicators. It pisses me off because I really try to test them hard, um, and I don't want people to have bad things. I want you to have high quality products that work well and that work as intended. And so when there are bugs, and there's been a couple with Sniper that have been fixed, it's really annoying to me because it could potentially cost somebody money in a trade. Now, costing somebody money in a trade and costing them all of their money, they both suck, but one sucks way worse. Now 50K, that's all we need to know. I suppose so. If you're asking, can it be done, Mark, the answer is yes. I'm certain you can have a bot company. There's several of them out there. Build. I know for a fact one of my users has a um, automatic trading bot linked to Pivot Point Pro, and he's been working on a lot of different things with it. I kind of find it interesting actually because one, I didn't create the bot, so it's not on me. Um, but he's like trying to understand if it works 24 hours better, if it only works during certain hours. And guess what he found out? That if you trade between 9 and noon, those are the best times. Those are the highest gains that you get the entire time. His his automatic trading with a bot showed him that, I don't know if I still have it up, but it was that he was only trading like one contract or a couple contracts, but he was up $4,000 from 9 to noon, and he was negative like $3,900 the rest of the day using Pivot Point Pro. It's almost like I told you guys to only trade a certain time for a reason. Um, but yeah, I know you can build bots for things, and I wouldn't even be against it if you did it. I'm just not doing it. So he ran a demo account. I'm gonna see if I can find it real quick. I forget who it was. I think if I find it, I think it was this guy. Let's see. Yeah. Oh, I had that backwards. I'm sorry. So from 9 a.m. to 1 a.m. or 1 p.m. From 9 a.m. to 1 p.m. he was positive. Let me just do the math real quick. Roughly $2,000 or $3,000. It's hard to. It's on a bar chart and you can't see the exact numbers, but it looks like about $2,000 or $3,000. From 2 p.m. on, he was negative $4,100, and he was just trading a couple contracts on this. Um, yeah, so I found that to be very interesting. And in general, calls were doing better than puts, which makes sense because it's a bull market. Generally, when you're with the trend, you are going to do better. So calls were more effective than puts. Earlier, you were talking about you had a good gut feel after the pre-market low broke about what market was going to do. Is that just years of experience, or can we easily learn this? So you have a bull day, right? It's really hard for the market to, and it's experience, honestly, and it's something you can learn, but you got to really understand what you're looking at, and see it more than once. So you have a bull day. The market opened up 40, 50 points. It's really hard for a market to fully reverse that. Can they do it? They've done it millions of times. Yes. Do they do it often? No. More often than not, when you're up 40 to 50 points to start the day, you're going to end the day green, and usually decently green. Um, they could have a bad close and maybe only be up 25 points or something, but generally you're going to stay either in that range or extend it. You're going to get a gap and go or some kind of consolidation. So when you see bullish internals, you see a bullish RTY, you see a bullish Dow Jones Transports, you see a bullish bank. You've got all of the context of a bull day, and then the Mag 7 is also bullish. When they're screaming down to the pre-market low and they set up to break through, more often than not, that should be a trap. They want the bears to say, hey, this is market's been selling like crazy. We're going to sell down this 50-point day. This is going to be the day you get 5 SPY points to the downside because they gapped up and they're going to close the gap. It's a very great place to trap. And then they're going to try to grind it back higher after that or explode higher. Now, since we're so close to the one-day max, they're grinding higher. If we were further away from the one-day max, they might explode higher. And they still might explode higher. There's plenty of time, and this market is quite oversold in a short-term basis. But when you see bullish context facing a bearish chart, almost always that's going to lead to a trap. And that's kind of what you have to weigh out is, does it make sense for this market to collapse here given the structure, given the expected move, and then given the data that's backing up the expected move. So when you have an expectation, the data backs up the expectation, and then the chart shows something slightly different, usually that's a way to get the people who are trying to make money out. So they want to trap the shorts first. Then so here, over here, they trapped the longs. They broke above the pre-market high. They got the shorts involved. They trapped them here, and now they're squeezing out the shorts. And this is not what I would call a very aggressive squeeze whatsoever. But anytime the pre-market low breaks, there's people watching and shorting here. They're late shorts, usually retail, when everybody else already shorted up here. And they're trapping them because what that does is it creates energy to push this higher. Once you get to a certain point, people want to sell, because especially in a selling market, because they're scared that it's going to get sold, or they want to get on the train or whatever, and it's a key level, right? The pre-market high is a key level. So they want to sell. And then once you start selling, people say, oh, they're selling. And the smart people already sold. So they take it below the pre-market low, and then the dumb money, if you will, according to the movie, enter here because they say, there's the break of the low. The breakdown is happening. Well, that's a perfect trap. And then these people now who are short have to buy back the market. So the bulls are buying, the people who shorted the market are buying, and that creates the squeeze, and then you get the move back up. So when they run out of buyers up here, they have to create new buyers. And how do you create a new buyer? By creating a seller. Does that make sense? It's a very odd concept, but to create buyers, you have to create sellers, because you have to be able to squeeze sellers in order to move the market higher. At some point it moves up, you run out of buyers, and at some point it moved down, you run out of sellers. So you have to reverse the market, get those people interested again, take them to a critical level where they think that it's going to break, get them in there heavy, and then reverse them, and that's how you get squeezes. And this is the game the market makers and the billionaires play over and over and over again. And this is the manipulation. This is so you've been sold a bill of goods by algorithms, by the market makers, and by analysts. You have the talking heads on TV telling you that the Strait of Hormuz is closed and there's not going to be any agricultural um, fertilizer, and that farming is going to be down and food costs are going up and inflation is going up. And all of that is true data, but it's fear mongering. And so what they're going to do is set you up. That was at the lows that they said that. And almost 30 seconds later, you get a Trump tweet and the market's at the lows. Everybody says, oh, Trump caused the market to go higher. If you were in my room, you would know that we were looking for a bounce off of the exact level we bounced off of. Now, did the bounce go higher than we anticipated? Yes, that can happen. But the 1236 extension is where we bounced. We bounced exactly off of it. We were looking for I think 100 or so points, maybe 150 points. Obviously, with the acceleration tweet, we went much higher than that. But if you didn't know we were looking for a bounce here, you'd say, "Oh my God, we're not going to have food. Inflation's going up. What should I do? I should sell everything." And then they rip it. That's manipulation. You have been manipulated by a guy who thinks he's telling you a good story and thinks he's doing his job and doing all those things, but he's really just pumping a narrative. And that narrative shapes your view, which is why the news is useless. Then the market makers take that narrative and the algorithms take that narrative and they use key levels and scary movements to promote fear or FOMO, and then they pull the rug or they pump it, one or the other, depending on which way we're going. It's all a cycle of training you to predictably react a certain way. Because if you are predictable, if you, the trader, are a predictable person, then they can predict exactly how you will react every time, and they can absolutely make billions of dollars off of it. And that's all they've done. They've made it so you are predictable. That every retail trader is completely predictable. They know where your fear points are. They know when you're going to break. They know when you're going to sell out of your position. It feels like they hit your stop every time, doesn't it? It feels like they know where your stop is with your two contracts. How did they know? Because they know where all 10,000 contracts are, because all retail has the same stupid stop, because they've been conditioned to put it in the same place. It's all the same thing. All the things they teach you are the same. All the things they tell you are the same. It's a manipulation game. And that's what the whole first part of the book is about. We taking any more off the swing? No, not yet. I feel fairly confident that they will continue to push a little bit higher over the next few days, and we may move our stop up. I'll have to look. I'll update that after the call, but we'll definitely move our stop up. But we got an extra on that because the move happened overnight. We got more than our normal 20% there, so I feel confident that the bulls are going to continue to push back toward. If we go back over here, toward at least this level here. They're going to come back because this was an after or before hours level. And I think cash will want to come and investigate 6738 and see what it's about. And we're looking for this C wave up. It may take shape as a diagonal, but we're still looking for, 6790 to 6800. So I won't be taking any off until probably we get up here closer to this 6740 area, whatever this high is. It's 6748. And again, you're welcome to take off anything whenever you want to. Um, Trade according to your plan, your risk reward tolerance, your bankroll, all of that stuff. If you're happy with the gain, do that. Just always remember, try to expand your horizon on taking profit. People are usually so happy that they have a profit that they want to sell right away, and they're so mad that they have a loss that they want to keep it until they have a profit, and then they get killed. Another manipulation thing there. They keep baiting you along like it's going to get reversed, and then they hit it so hard that you can't even get out. But anyway, the people who make the real money in the markets stay in and understand that their stop is important, not getting the extra 38 cents. My biggest concern is that this is a not the greatest pattern to the upside I've ever seen for a C wave. That's for sure. Um, but again, they can make this into a diagonal, and I feel fairly confident they're going to come up here into this high here off of this tweet. All right, this bar just opened. We'll see how they do here. It's possible we could get a sell signal coming up, but depends on how this bar does overall. And I see this shenanigans bar right here. So somehow this wick hit 660.50 without ever getting there, which means that price is very likely to come to that level. So very often those wicks, by the way, they're excuse me, huge trades coming through that they put in tranches, and when a tranche hits, it um, split second spikes the market, but it doesn't truly spike the market. It's kind of they bought all those levels, but those levels never really existed. It's kind of a weird situation. But those phantom wicks, if you will, are not by accident. Um, those are real levels that are coming in that you need to be aware of. And if they've bought it all the way up to that level, usually they want to buy it past that level. High volume level here, the blue line. Those Mentor Q levels, very important. They've bounced off of it about 5 times here. We'll see if they can get through it. This is a huge one. This is a high volume level and the call resistance 0 DTE level. I think this is the intraday one. Let me check. Yeah. So it's a high volume level for end of day, and intraday it is a call resistance level, which is a big level. Those are the bigger. So the reds and greens are bigger. The blues are still very powerful, but not as big as the call resistance or the put support. If you want those levels, I do have a link in the description that will get you a discount on it. I get a kickback as well, but I don't recommend anything I don't use. In fact, the only 2 things I recommend are that aren't my products are Mentor Q, which is those levels, and TradingView. So I'm not out here shilling a bunch of products to make money. I don't operate that way. Another tell is options levels. If options levels are high, you can expect at least some kind of significant downside move. We've gotten one today. Um, an options level were elevated, but not like blow it out of the water. So we may get a sell here, by the way, so we'll be ready for that. Oh, no. We need this bar to close slightly higher. If this bar doesn't close higher, then ES has just been ridiculously bad today. Hasn't been able to keep up with uh, NQ. Oh, maybe they got there. We'll see. If the sell warning stays, you know they closed it high enough. Oh, okay, now we can get a sell. See if we get a trade here. Off of this high volume level and intraday. Got a fly in here. Intraday call resistance. Should be a pretty stout level. I currently have a 658 put queued up here. That's what I'm going with. Continuing to backtest and hold the 8 and 21 here. If they take out this high, continues the trend to the upside. Doesn't mean we can't get a sell signal, but it would be a bullish revelation of this little tiny pullback. Taking out that high does open the door to squeezing back up to 650, 660, I should say. There's not a whole lot in between here and there as far as resistance. So that'll be a key. This will be a key area here of, can the bulls fight and continue to push higher, or do we see a little bit of a pullback first, or a lot of bit of a pullback? I guess certainly possible. We'll give it a few more minutes here, one more bar, and if we get a sell warning on this bar, we'll take, or sell warning. If we get a sell on this bar, we'll take it. Otherwise, we will. Oh, and the question was answered, by the way. There was a question: will the sell warning, the SW, disappear, or do both appear on the same bar? It disappears if a sell comes up. The ES has really been a thorn in our side today. NQ has been flipped for this whole bar, basically. ES has not flipped yet. Good morning, cats at home. Sleeping in today, I see. There we go. Okay, we got 172. And our stop is 658.30. We are short here. And we can move our stops to 658.05. Okay, we can move our stops to break even. And we can collect here. Close half at 205. All right. So stops are 172. Oops. And we've closed half at 205 here, so a winner. Guaranteed winner, and let's see if we get a little extra pressure to the downside. Are you the only one from Sweden here? Um, there's not that many people on the stream, so it's possible. Back into decent support here at yesterday's high. We'll see if they can break through that or if this was a one bar wonder. Let's close another half here at 240. Half of remaining, I should say. And our stops moved to 190. Actually, our stops moved to $2. And the reason we took some off here is we're back at the pre-market low or close enough that it can hit and reverse very quickly. So we take it just before the pre-market low, but we're looking at key levels, wanting to take off profit where we can. And yeah, so this is maybe we're going to break the Wednesday curse. Looks like we are. This is going to be a winning day finally. Either we get no trades or shitty trades on Wednesdays. And today, hey, we did it. Look at that. We hung in there. All right, we got our stops at $2. There's the bounce off the pre-market low area. This is why you don't wait till it tags the exact pre-market low, because this can, whether it does or doesn't, it can spike directly higher and stop you out for, the original 170 or whatever. So you always want to take profit at key levels because that's where you're most likely to see reversals, and you don't want to give up winners. You just don't want to give up all that money, and it gives you a chance to take money at the absolute low. All right, moment of truth coming up. Can they get back through the pre-market low and ultimately today's low? That will be kind of the deciding point of what could happen the rest of the day. We could see a little bit of selling if that happens. 653.19 would be a very likely, or 653.07 would be very likely targets. Ugh. Oh, here's the breakdown of the pre-market low in a hurry. Whew, that's pretty good. Let's close another half of remaining for $3 and move our stops to 280. And that's rifling down. We got ourselves a runner. Move your stops to 330. Move your stops to 350. I love 20-cent runs. Those are great. Think we'll let it run down to yesterday's close at this point because there ain't much here. If we get stopped out, we get stopped out. Let's move our stops to 370. Nope, make that 390. My goodness. And we got stopped there at 390. Nice trade, guys. That last part was well over 100% take on the stop. One second here. All right, an average exit of 249 on that. Big winning day. And we're going to call it for the day there with that nice win and that rundown. All right, guys, a successful day. Like I said, Pivot Point Pro, great at reversals. IWJ Squeeze, great at squeezes. Squeeze Sniper, great at squeezes. If you don't have Squeeze Sniper, here's the deal, by the way, before we get off. coincided with Iran rejecting the U.S. proposal. You were ahead of the news because the news doesn't matter. Um, Here's the deal, by the way. If I forgot to say this, if you have Pivot Point Pro already and you get Squeeze Sniper just through March, you will get refunded your money for Pivot Point Pro, so you won't pay anything anymore for Pivot Point Pro, but you'll get to keep it as long as you have Squeeze Sniper. So you get both of them for the price of Squeeze Sniper, if that makes sense. So if you have Pivot Point Pro already, you'll get refunded prorated whatever you've paid so far. Or if you're on the monthly and you're 15 days in the month, you'll get half back, and then you'll get canceled on Pivot Point Pro, and you'll have both Pivot Point Pro and Squeeze Sniper for the price of Squeeze Sniper. That is the deal. It's in the link, is in the description. Check it out. It's an incredible, incredible, incredible indicator, as is Pivot Point Pro. If you don't have that one, you can get them both for the price of one right now on that deal. So check that out. You also get a couple extra bonuses in there, our price action training and our options training, I think. So check those things out. It was great having everybody here. We'll do it again next week. Finally broke the Wednesday curse. Hopefully next week is just as good. We will be back to do it all again next week. I'll have my live call for the members of my room at noon. We'll see you guys then. Thanks, everybody.